Welcome. Thank you for joining us. This is the first of a series of webinars, Confessions of a Business Owner. For those that know me well, I'm really keen to get under the bonnet and understand from business owners what it is that drives them to do what they do, how they can keep their mojo in their business, and alongside that, how we can support small business owners in achieving much better success rates than they do previously. 95% of businesses ultimately fail, and I think the current climate is not going to help that at all. So I'm delighted this afternoon to welcome Brian Snape of Mighty Oak Business Finance, who's going to talk about where you should be investing for growth. So Brian, good afternoon to you.
Afternoon, everyone. Thank you for joining us.
And yeah, absolutely. So Brian, do you want to just give everybody that doesn't know you a quick introduction, who you are, what your business is, and what it is that you do?
Yeah, my name is Brian Snape, and for my sins, I originate from Liverpool, moved here to Leeds in 1983 and studied economics and public policy at Leeds Polytechnic. Wanted to go into the housing department actually at the local council, but then realised there wasn't the return in terms of income by doing that, so decided to go into financial services. And I've had a career which has been spread over the insurance industry and banking for 35 years now, all based here in Leeds. I've been given opportunities to move around the country, but actually I've been resident in Leeds since 1983. And my business now is, when I moved away from the bank, it's a commercial finance brokerage. So I work with SMEs in all sectors, helping them access finance at the right time and at the right terms from a panel of in excess of 200 lenders in the marketplace.
Fantastic. And Brian, after 30 years in banking and insurance, obviously that comes with a skill set, both from a corporate perspective and all the ins and outs of finance. You could have chosen a number of different career paths at that time, couldn't you? Why did you choose to go into commercial finance? What is it that's driven you to be a commercial finance expert amongst, over and above everything else?
Well, when I first started out, I went into the insurance industry, and I'll be brutally honest, that's because that job at the time was paying the most income after I left college. But I wasn't particularly interested in the insurance side of things. I always gravitated more to the numbers to see how businesses were performing and the challenges that businesses were facing. And it just felt right that finance was a more appropriate environment for me to be in. And I felt as though when I was in the insurance industry, I was dealing with a lot of big PLCs. We had customers on our books, which included Marks and Spencers. We did a lot with Peel Holdings, who own the Trafford Centre, did a lot with Manchester Airport, but you weren't actually ever in the room with the decision makers. So you felt quite divorced from what was really going on. I wanted to get to the coalface, and going to work in banking gave that opportunity to work with SMEs. And I just felt that the skills that I'd learned in terms of account management and sales and even underwriting in the insurance industry would serve me well in banking. And I'd be actually dealing with working with the decision makers and the business owners themselves. So I found that more exciting than being stuck in a stuffy boardroom, to be honest with you.
Fantastic. So this for you is about getting in the room with the decision maker and helping impact and influence and support that decision maker.
Correct, yeah.
Fantastic. So Brian, from my point of view then, so why is it that small business owners, 5.7 million small business owners at last count, why is it small business owners need what it is that you have?
I think most things in life you need to invest in to grow and develop. Now that can be an investment in time, but in a lot of instances, it's also an investment in cash. That's if you want to, move house into a bigger house. When you start out in life in rented accommodation, you haven't got the capital behind you to go out and buy a house cash. So therefore you borrow money. And the same principle applies to business owners. They don't always have the disposable cash to invest into their businesses. So therefore they're looking for solutions to help them grow. And it could be solutions to buy property. It could be the solutions to purchase assets. or it could just be financial solutions to help with general cash flow as well. So what we've got, and this really, I think, started post the last recession. As bad as that was, one of the good things which came out of it was the level of choice that all of a sudden business owners had. So you didn't have to rely upon your bank anymore. And I remember being at the bank, declining God knows how many applications for loans for businesses. And it kind of broke your heart to think that that business owner was going back to the office at home, or the office at the end of the garden, or the office wherever, and burying the head in the hands, not knowing where to turn because there were no other solutions. But what we found was a growth in the alternative market with some well-known names, such as Funding Circle, for example, are well-known. We also witnessed the advent of a lot of challenger banks that were coming in and competing with the high street banks where I worked at the time, providing some really innovative, fast, expedient solutions which were far more user-friendly than perhaps what the banks historically had always been able to offer.
And isn't the challenge, Brian, that you know, whereas banks were open for business per se, going back 10 years ago to that last recession, and they are still open to a degree, they're a lot more choosy about what, why, who, and when they'll lend. And so for business owners that need access to funding, access to finance, and maybe, you know, the criteria different to what they were, it's not perfect criteria, the alternative market is one that's really flourished in the last 10 years.
Yeah, I mean, the banks sort of put into place new policies in and around the recession of 2008, 9 and 10. And I think you're absolutely right, Gary. The appetite was very, very restrictive. You had to have a profit that would meet certain calculations for debt serviceability. You know, the level of security that was offered, the percentages were invariably lower than what you could get in the alternative market. If you were looking at it's a bit of a misnomer, unsecured borrowing, the banks, again, would only go to a certain level where we had the likes of Funding Circle and others that would provide facilities well beyond what the banks were able to offer. So, yeah, it was very, very restricted. But let's not lose sight of the fact the banks do most of the lending in the marketplace. The bulk of the lending is still done by the banks. But actually, there are a lot of solutions out there that a lot of business owners aren't aware of. And you know, I feel it's incumbent upon me, in my role as a broker, to make them aware of what those solutions are.
And isn't the challenge from the time I've known you, Brian, you always say that actually the ignoring current opportunities aside, the easiest and probably cheapest way to access commercial finance is from your bank, and that should always be your first port of call. But the reality is you can't get hold of a bank manager for love nor money unless you're above a certain turnover, above a certain debt requirement. So for a majority of the market, you can't actually get through to a person to talk to.
Yeah, I mean, that's true. But fortunately, we've got relationships with a lot of the banks and have direct access to both their relationship managers and development managers. But you're absolutely right. You know, when I go through a due diligence process, when I first start working with a customer, the first question on that is you are aware that you can actually approach your bank direct for finance, or I can help you by approaching your bank direct on your behalf. But what tends to happen is, as the banks have moved away from having frontline staff on the road, the relationship managers, and it's gone to a telephone-based operation or an internet-based operation, it has become very, very much computer says yay or nay. And a business owner doesn't get to explain what the rationale is behind their request for a facility, or be able to explain why they may have had difficulties in their business. So we're moving away from storybook lending, and it's a case of, yeah, put this in, we'll work on algorithms, and you know, it's either going to be yay or nay. And then add to that the strict criteria the banks have got, and that's why you find that so many business owners just are not getting the support that they need.
And so, Brian, what are the common mistakes that small business owners make when, they're going about their business, and they're going to need some funding at some description of whatever that may be, whether it's debt funding or whatever it might be. What are the common mistakes that small business owners are making in your experience?
Most of them don't know the numbers, first and foremost. They don't have cash flow forecasts, they don't have profit and loss forecasts. And I know you could argue at this moment in time, well, where are we going to be 6, 12, 18 months down the line? But the problem is there's literally no planning there at all. They don't know who their target markets are, what the cash flow situation is, what the profit and loss is. And therefore, they can't produce a substantive application or submission to their banks because there's just glaring omissions. So I would say that's the main thing, is the lack of understanding around numbers and the lack of planning, and it's a huge issue.
And what is that? Is that ignorance? You don't know what you don't know? Is it I'm frightened of numbers? Is it I don't think they're important? Is it not having good enough advisors and accountants around you? Why do business owners not understand the numbers?
Because I think most of us that go into business are practitioners, aren't we, in our own specific field. And somebody's a good electrician, somebody's a good plumber, somebody's a great property investor. They know what properties to buy. But when it actually comes to running a business, they don't necessarily have that skill set. And it's a challenge for all of us, which is why I always advocate that you should have a strong professional team around you in every single area. Know who the professional people are that you can turn to and keep in touch with them regularly.
So what you're saying is make sure your advisory panel around you, whoever that might be, whether it's a bank manager, a funding expert like yourself, an accountant, get somebody that's going to help you understand your numbers and produce some kind of forecast, but B, hold you to account to make sure it's correct, it's regularly reviewed, it's updated.
Yes, absolutely.
Because from my experience, Brian, with a number of business owners I deal with, what tends to happen, and this tends to be before they come to me, is they wait until they run out of money before they realise that they need money. And I don't know whether that's a hit and hope strategy or the lack of forecasting, but from your experience, trying to access finance 5 minutes before you need finance is problematic, right?
It is, yeah.
So how, if you're going to work backwards to an ideal scenario, how much earlier should you be starting the process to access finance if you're looking to do that?
Well, again, it goes back to if you've got a professional team around you that are advising and you know your numbers, and let's be honest, when we talk about numbers in respect of a forecast, there is nothing more than a forecast. But I think you have to look at a worst case scenario, best case scenario, and somewhere in between as well. And there's lots of applications out there to help people put together a forecast. But when you do that, it's very, very easy to see where the peaks and troughs are. So if you know that you're likely to have a cash flow issue in, say, 3 months' time, well, really you need to be seeking advice and support at that moment once you've identified that there's going to be that dip.
So in your experience then, so once you know the numbers and you can work backwards, so what you're saying is your forecast is going to tell you when you're going to have a dip.
Yeah.
So, but typically, if you know that you're going to need some kind of finance at some point in the future, how long does the process take to go through the right due diligence and the rest of it? What's the kind of minimum run-up time in an ideal world?
If we're talking about cash flow lending, bear in mind, if you get an acceptance from a cash flow lender out there, normally they only last for a month. So it's very much, it's a short window of opportunity to actually take that loan. But I would say that you need to be reviewing your position. When I review my own financial position on a weekly basis, but as a bare minimum, people should be looking at it monthly, just to see what's happening. And I can adjust my cash flow on a weekly basis because circumstances change, good, bad, and indifferent. But a lot of this comes back to the relationship, Gary. And I'll backtrack to being at the bank. We were encouraged to, as a bare minimum, have an annual review with each and every one of our customers. And we would go through a host of questions and challenges and really drill into the business, what was going on. And it wasn't all around finance. It could be anything to do with the business. It could be an employment issue. It could be a marketing issue. It could be something to do with the business owners not necessarily having the right protection in place from a life insurance, critical insurance point of view, a whole host of things. But actually 12 months was too wide a window, really. So we wanted to do it and try to do it as best we could twice a year with our customers. Now, not every customer would take advantage of that, but weirdly, there was a direct correlation. Those businesses that we had a higher frequency of communication with always seemed to be performing better than those that we either struggled to get hold of or might see us as a minimum once a year. Sometimes it even extended out to 18 months. So they actually wanted that relationship. They wanted the hand-holding, or they just wanted to know somebody was there in a case of need basis. But there was very much a direct correlation.
So it's having some momentum with that relationship.
Yeah.
So you understand your numbers, you're regularly reviewing them, and you can, this for me is a bit like a sat nav, isn't it? You're trying to anticipate where you've got a problem on the road ahead.
Yeah, absolutely.
But from a funding point of view, just to put a number on this, Brian, just for everybody kind of watching live or on repeat, whether it be the alternative funding market or whether it be the bank, what's the minimum run-up? Is it 8 weeks? Is it 3 months? In an ideal world, if I'm going to apply for some funding to help with the growth of my business, what in an ideal world is the lead time? What's the run-up?
Well, for me, the ideal lead time, I would say, is about 6 weeks to 2 months. Is the ideal time period. My proposition is based very much on a relationship basis, though, as opposed to purely transactional.
Yeah.
Because if I do get that telephone call at 1 minute before 12 after the 11th hour, the problem is it is too late. The business is already in distress at that moment in time. And just a straightforward assessment of that business will tell you, well, why didn't you know about this?
Yeah.
You should have known about this in advance. Now, people will get caught out from time to time. All we have to do is look at the past 2 months and the way many of us have been caught out. But as a general rule, people should know what they're like, what's likely to be coming into their businesses and what their costs are going to be.
So this is like a sat nav for me. And if I'm going on a 4-hour journey to London,
yeah,
and I get halfway down the motorway and it tells me that there's trouble on the road ahead, and my ETA is going to change, I can look at an alternative direction, or I can ring ahead and change the time. What I can't do is if I wait until I get to London, then look at my sat nav on my clock and go, oh, I'm late. It's too late, isn't it? So this is about anticipating what's ahead, your sat nav, if you like, and then starting to say, look, I've got an issue with cash in 2 months, 3 months time.
Yeah.
You know, what do I do? Is it revenue? Is it profitability? Is it cash? Is it funding? Whatever. You can at least look at the tactics to help you overcome a potential problem in 2 to 3 months.
Well, absolutely. I mean, it's a great analogy, isn't it? You know, and if you're looking at your cash flow, but I mean, if you're working on a B2B basis, most people are going to produce something, sell something, and have terms of credit with their customers where they might not get paid for 2 months, sometimes 3 months. It depends what the credit terms are. And if you've still got expenses to hit, you've got to meet those expenses, so you need the cash coming in. And the current circumstances, what they'll illustrate better than anything else is all of a sudden, people have stopped paying money. So you've got businesses' debtor books are growing. The debtor books are becoming overdue, so they're having to engage with debt collection agencies to get the money in. And actually, they've still got sound business. They've just run out of money. And this is one of the challenges that business owners face, is that too many don't understand the difference between profit and cash. The amount of conversations I have with businesses who are saying, oh, look at my accounts, and I'm making a fantastic profit, but weirdly, I don't have any cash. Why is that?
And that comes down to not knowing, you know, you don't know what you don't know. And that comes down to having the right advisor around you. You know, one of the first things I say when I walk into a client that's had some problems, if they don't understand the numbers, they don't understand the difference between profit and cash, they don't have a cash flow forecast, you know, I always challenge, you know, are they with the right accountant, or are they paying their accountant for a transactional service and therefore they're getting a transactional service? So I always say either spend more money with your accountant and get the answers to these questions, or change your accountant.
Yeah, I agree, Gary. And what I didn't share with the audience today. Some people who know me will be aware of the story, but you know, we're 2 days away from it being the 6th anniversary of my brother passing away, and he had quite a successful business. And you know, the tender age of 50, just went to bed one night and didn't wake up. And he ran a number of dental surgeries, and they're quite lucrative businesses. But what we found out very early on was, as lucrative as it was, locums aren't cheap. There was a huge amount of expenses that needed to be met within the business, and all of a sudden there wasn't anybody there because he'd not done sufficient planning. So I had to start managing that business very, very early doors, not knowing anything about dentistry at all. It was a massive education, but what it taught me was what the real challenges of being a business owner were. And it was the fact that here's somebody who was quite financially savvy, but that's my brother I'm speaking about there, but there was still loads of gaps in the business. There were staff issues, there was issues around the property that they operated from. One venture, he had a business partner, and you know, he was in a different financial situation to my brother, so there was stresses on the business here, there, and everywhere. And that, in a sense, is what kind of drove me into doing what I want, what I'm doing now, why I want to help businesses, because I experienced firsthand what the real challenges were. So it wasn't experiencing the challenges on the other side of a desk being a bank manager and looking at people's numbers and having those review meetings with them. All of a sudden it was something that kind of hit home quite hard, to the extent that we were having to remortgage and put money into the business to keep it going. But that isn't a unique situation in terms of, you know, somebody not having the handle on the business as they ought to have done, or having to put their own cash in.
And look, that's the difference, isn't it, between that technician or that practitioner business owner. Yeah. So, you know, I'm a marketer, I've set up a marketing business. I'm an accountant, so I've set up an accounting business. Doesn't make you a business owner as such. It makes you an accountant with responsibilities. And so the difference is taking that accountancy practice, that dental practice, whatever it might be, and all these other bits around understanding your numbers and forecasting and then investing correctly is the business owner bit, isn't it?
Yeah, absolutely. And had he, like a lot of other businesses, invested in a professional team around him, so we would have had immediate access to accounts, we would have known what was going on, we could have got straight into the bank account without having to, you know, wait for paper statements to come through. Sounds crazy, doesn't it, in 2020, but that's what it was like. We didn't really know what the situation was. Had the business been more automated, it would have been a lot easier, you know, but client records were kept on, there was no CRM system, anything like that. It was manual records, and it's well, who's got appointments where, when, and how?
Yeah,
you know, it was a nightmare. Well, there's still a lot of businesses that are operating like that. They're not investing in people, not just outside of the business, professionals, but the right people inside of the business, and actually assets to help their business run more effectively.
So that leads me perfectly on to the next question. So, you know, once a business owner has got either the cash in, they've generated cash in the business because they understand the numbers and they've been cash generative, or they've got some kind of commercial finance in place successfully, so they've got a war chest. And we all know the problems of the last couple of months, and we said we didn't want to particularly labour on the C word, but there's going to become a time very, very soon in the next month, 2 months, where businesses are going to look to start to invest, whether they've got a bounce back loan or whatever. So from your experience and given the current situation, what should small business owners, where should they be looking to invest to get maximum return? What are the kind of areas that they should be investing in that's going to help them take their business to the next level?
I think the two key areas are investing in the right people now and automation systems and processes. So if we take people to start with, and, you know, apologies for being repetitive about this, it is that professional network around you. So, you know, if your accountant isn't giving you the right support, work with an accountant that's giving you the right support, and get signed up to, you know, one of these cloud-based account systems and have regular contact with your accountant, rather than just doing it on a spreadsheet at the end of the year to maybe save a couple of quid. But also invest in the right people to work within your business as well. And I think because it's people ultimately that are going to make the biggest difference for businesses moving forward now as to how successful they will be or otherwise, because the market, there will be a lot of businesses that lose out because of what's happened, but moving forward, there'll always be opportunities, and you want to position yourself the best possible way. So have the right people in place outside of the business, the right people in place inside of the business, but just as importantly, make sure that you've got the right assets as well. So assets in terms of your CRM system, your marketing strategy, regarding as an asset, if you know the latest kit, if you're relying heavily on computers. And I work with a customer that they invested pre-COVID really heavily into a lot of new machinery and plant, about £500,000. That will double their output, reduce the kilowatt hours that they use. So therefore, it's a win-win situation for them, because outputs increase, costs have gone down, and profits are going to increase as well. Now, their marketplace, there's very, very few people that will be able to compete with them, because they took that leap of faith early doors and invested a lot of money. But likewise, it's the businesses that have got an infrastructure in place now, digital marketing, all of these things, they're a step ahead of a lot of us that haven't done it.
So what you're talking about then
really needs to be.
So in summary, it's looking at your marketing strategy and some of the automation that goes with that, just to, because what that's going to do is it's going to build your pipeline of leads and help you retain your existing clients, isn't it?
Yeah.
And that's a problem for most small businesses. They're either not retaining their existing clients, they're constantly on that win treadmill, or they're not keeping in touch with their prospective clients, and therefore they're not converting enough leads. So having a marketing system and marketing automation and a strategy in place is something that a small business owner should invest in. And then when you add on to that, looking at building the right team internally and externally, as far as, you know, who should be doing what tasks internally to allow the business owner to focus on running the business, and who's in that advisory team outside to make sure you're being challenged, you're accountable, and you're getting answers to questions you don't even know to ask. So, you know, whether it be forecasts or whatever. So advising the team, invest in the team, invest in the systems, and invest in the marketing.
Yeah, I would say so. They're key.
Are we risk averse as whether it's kind of 5.7 million small businesses, whether it's a British thing? You know, do we prefer to squirrel the money away for a rainy day, or do we as a nation of small business owners like to take some calculated risks and invest in our growth?
I think if you look at behavioural bias, one of the key areas of behavioural bias is that we tend to remember the losses more than the successes. We'll boast about the successes, but actually deep down we remember the losses. So that makes us really, really hesitant to invest. And invariably, when we do start to invest, we're starting to invest at the peak because everyone else is doing it. So we've kind of missed the boat, really. We've got in too late. You know, the property market, which will always grow, but it is a great example. People wanting to jump on the bandwagon onto property, and many will continue to do so and be successful. But actually what happens is, it's almost like, and I hate to use the terminology at this moment in time, but it's almost like this herd mentality, where everyone else is doing it, therefore I'll do it. We're actually probably better off just taking a step back and actually looking closely at what it is that you're going to invest your money into. And if it's a personal view, but if it doesn't feel right or I don't understand it, invariably I wouldn't invest. Or if I felt it was a good opportunity, I would be seeking the guidance of a professional person. So what we'll witness in the coming months is there'll be a lot of people in business that have said, I've had enough, I don't want to do this anymore, I'm going to sell my business, I just want out. And there'll be others that are saying, well, actually, here's a great opportunity to go and buy a business.
Yep.
But they will then want to do their due diligence around it and make sure that everything stacks up. But I think you'll find a lot of that going on. So there will be risk takers, a lot of risk takers, but most people do tend to go to the kind of risk aversion mode.
And I know it's something we've touched on previously, but if you're looking to access some kind of commercial finance, why is it important that you have a business model? Why is it important that you can articulate how your business generates its commercial value?
because ultimately any lender, whatever their criteria is, Gary, are going to look at the viability of that business. And you have to be able to demonstrate how you win business, how you pay your bills, where your introductions come from, just how the business operates. And you know, there's a variety of different models out there, aren't there? But what the banks and funders are looking for is a degree of certainty. And a model, whatever that model might be, provides that extra degree of certainty and security to any prospective lender.
Okay, so this is about having a business model. And for those watching, a business model isn't a business plan. A business model is how you generate commercial value. It's all your different income streams. So that's about being able to give some degree of predictability and some degree of certainty to a potential investor that you've got a sustainable business model, and you can ultimately generate the funds you need to generate to service your debt, right?
Yeah.
So Brian, what you know, you're saying there that the commercial funding market has really blossomed in the last 10, 11, 12 years off the back of the last recession.
Mm.
What differentiates your business from the many other people that sit in your space? Because it is a bit of a minefield, isn't it? You know, and we've all heard horror stories about people that get ripped off and don't get the right advice and finish up losing the business as a result. You know, what differentiates you and your business from the many other peers and competitors you've got in the marketplace?
You know, it's a great question, and I'll be honest, it's quite sometimes a really difficult question to answer, because a lot of people talk about USPs, don't they? And actually, there's very few of us that have actually got a USP. It's normally the usual stuff people say. So what you won't hear me saying is, oh, it's all about service, you know. But what I am keen on, when I set this business up, I didn't want to be, you know, a multi-million pound revenue business. What I wanted to do was essentially fill that void that the banks had left because they'd reduced their relationship management numbers. I wanted to fill that void and have a human-to-human proposition whereby it wasn't purely transactional. So I don't need hundreds of customers. I just want a nice select group of customers that we can work together really well, and we'll do the repeat business. Now, I'm part of a network which is the Synergy Commercial Finance Network, which is part of what's known as the AFS Group, which has been in existence for 15 years. We're members of the National Association of Commercial Finance Brokers, which is our trade association, and they dictate to us criteria that we have to work to. You know, there are codes of conduct that we must work alongside, and that's really important, because it means that you are responsible and answerable to a trade association in the event of doing something wrong.
Yeah.
Being part of AFS, Synergy gives you the compliance module as well, which is really important, because commercial finance at the moment is an unregulated marketplace. So arguably anyone could go into it. But our emphasis is very much on compliance to make sure that we're doing the right things for the customers all the time. And then add to that the fact that there's an extensive network around me within Synergy of 70, 80 other guys and girls, that each and every one of us has an expertise in a certain area, so you can always touch base with experts. So when an inquiry lands on your desk, I'm not the oracle. I don't have the answer to everything all of the time, but I've got a network of people that I can actually approach. So if I put all of those things together, along with 30 years experience in account management and sales and wanting to work with customers direct, I feel that prospects and existing customers of mine are getting an all-embracing service, which isn't just looking about trying to earn a quick buck and get a deal over the line. If it's not right, it's not right.
Yeah.
We'll look for other solutions, because the solution isn't always financial. There's a whole host of other solutions out there. Sometimes people just think, I need money for X, Y, and Z, when actually, no, you don't need money. If you just did this, you'd have a solution. So I like to take that holistic view.
And Brian, what's important for me, and you've got that bit there about your trade body and, you know, your regulation bit in an unregulated market. what's really impressed me in the time I've known you, there's a number of times I've put you in front of a prospective client or an actual client. And, there's been a number of occasions where you've gone back to the client and said, do you know what you've got in place is actually the best deal for you. I can't help you on this occasion. Or why don't I introduce you to such and such at your incumbent bank, because I think that's the best option for you. So from my experience, you've always done the right thing by the client rather than some that might be looking to make a quick buck. And I think that's important.
It's kind of you to say that, Gary, but we've witnessed this over the past 2 months. When CBILS was first launched, there was brokers out there charging fees, quite hefty fees, without any prospect of that customer being accepted for the loan. The NACFB guidance was you could only charge a fee upon a successful completion of a loan and those funds going into a customer's bank account.
Yeah.
Now, I've also heard tales that under the bounce back loan, brokers have been charging fees for that. Now, I don't know if anyone's applied for the bounce back loan who's in this audience today, but it's the most simplistic of processes that actually I'm not bringing any value to the table at all. So I would just say to somebody, you approach your bank straight away, or if they don't do the bounce back loan, we'll look for other options for you with another organisation that will. But it was within my gift not to charge a penny for helping businesses get CBILS. And I think customers of mine to date we've had about 1.7 million out in CBILS loans to them, and I haven't charged a penny for that. But I'm a huge believer that relationships and a medium long-term strategy will always prevail.
Okay, so last question before I open it up to the audience for Q&A is, any business that's looking to get themselves to the next level, and whether they've got the funds in place or they're looking to access some funds, but they're uncertain, what questions should they be asking? What answers can you give to them? How can you help them with their next steps as to what, where, how they should be investing?
I think for somebody to look at themselves and their business to start with as to whether they would even be considered for a loan, this is away from the government-backed schemes. I work on the acronym Campari and ICE. I don't know if people are familiar with that acronym. C is character. Who are you? What's your payment record like? What's your history like with your creditors? A is the amount that you're looking to borrow. M is your means. What does your asset background look like? So A is not ability, amount. A is ability. So it's your ability to run the business. So we've got character, ability to run the business. M is your means. P is what is the purpose? What is the purpose of the loan? The next A is the amount. R is what is the repayment structure like? What does repayments look like? And then I is the price of the loan, so the interest. But some people attach the word insurance, which is security, to the I. So it's like, what insurance is there as well? And then the ICE is just, we'll ignore that for the time being. But when people use that acronym and look at Campari, say, right, where do I sit within that acronym? Most people will be able to define for themselves whether they are somebody that is likely to be lent money by a financial institution. In terms of the steps that people need to take once they've gone beyond that, well, it all goes hand in hand, and it comes back to having the right people around you, knowing your numbers, and ideally, you can have a little bit of a war chest. That helps as well, because lending is a risk game, and most people don't want to say, well, there's 100% of what you require. Yeah. You know, we expect you to have some skin in the game. So the principles of lending are really, really straightforward. You know, if I ask somebody for £1,000 today, who's in this audience, can I borrow £1,000 off you? Everybody instinctively will start going through their own due diligence process. Who are you? What, you know, who else do you owe money to? How do I know I'm going to get paid? What's it for? So on and so forth. And prove to me that actually this money that you're borrowing, that actually you're going to get a return on it. And that is the key thing. don't throw, this is not a time to be throwing good money after bad. You know, if you're going to invest in something, you want to be as confident as you possibly can be that there will be a decent return on it.
And that's the important thing, isn't it? If you invest wisely and take the right advice, you're going to get a return.
Absolutely, absolutely, yeah.
Fine. So I want to open it up now. You've been very, very generous with your advice. There's a couple of comments to that effect in the comments box there. You've shared a lot of wisdom and a lot of experience with us. So if I can just open it up to everybody, who has any questions, please? If you can just post them in the chat function at the bottom. Who's got a question, please? Anybody? Don't be shy.
And we're not going to be put on the spot.
Doesn't look like it. Does anybody have any questions for Brian?
Okay, go on then.
I knew you'd ask one.
I knew you knew I knew. All right, Brian. Not necessarily just my business, but for a fairly young business that's gone through the startup, is actually the wheels of motion are just kind of moving, and then this COVID thing comes along, and it's basically been put on ice. But I've spent my time working on the business. Now I can see some green shoots literally out in my marketplace, but it's about consumer confidence. So I have a bit of a war chest. I've been lucky. I've had some startup finance. There's some dregs of that left. I've made a decision that I need to plow on. I've had advice from my accountant, and we've got a model. We think we can work that through. Would you I think you did say something about the fact that if you're going to invest in the right things. So for a young business like mine, would you say to invest in the newest technology, or the things that maybe will stimulate the consumer confidence to start, you know, picking up that phone again? I mean, I've gone onto a digital platform for designers, architects, etc. And I have to say, within the last 2 weeks, my inquiries have really shot up. So I feel like the return on that investment's been the right thing. So taking that small model, taking my business model to the next stage is we're thinking about franchising. That's going to take an awful lot more money. I am probably more of a risk taker than risk adverse, but even I am like, oh my God, you know, here we go. You know, this is kind of the scary game. But what words of advice can you give me other than what you've given as a general, to kind of taking the leap of faith?
I think that will come from within, Ellie, to be honest with you. But knowing you as I do, and I saw your original business plan, it was very, very robust. And actually, I'll try and spare you blushes, but it did put a lot of other business owners to shame, the detail that you went into. You know, subsequent to that, you've invested heavily into an automated process to make the customer journey a little bit easier. So that hopefully will pay dividend moving forward, because that customer interaction is absolutely imperative, isn't it?
Yeah.
You know, I've seen your activity online. I've seen the quality of the video that was produced. You know, I think it's just consistently and continually getting the message out there. One thing we don't know moving forward is we know there's going to be change, but I don't think any of us can actually say what that change will be. Who knows what people's buying behaviours and habits will be. But I don't know how sensitive this is, but in your particular market with what you do, which is trying to keep elderly people in their own homes rather than going into care, if you actually look at what's happening and what's being announced on a daily basis and look at what's been happening over the past month, you know, that it sounds a bit crude, but that in a sense provides you with the perfect opportunity. So what I would do now is, and I'm not a marketeer, but I can see that opportunity for you. And we've had lots of challenging discussions around it. I can see that opportunity for you now. The key to, if I were in your shoes now, I would be speaking with a marketing company to make sure that that message, which is a very, very sensitive one.
That's the thing, it's sensitive, and I have to tread that really fine line between profiteering, you know, making the most of that opportunity, and a genuine desire to enact change. And the thing about the marketing, Brian, and I hope there's no other marketeers here, but I feel like I have, you know, I've been fresh meat for marketers as a startup. And, you know, some of the return on the investment, as far as I'm concerned, hasn't been great. Some has, some hasn't. And it's such a scary thing. It's such a scary thing with the marketing, you know. And I think it's the quickest rabbit hole to pour your money down into, you know.
It is, but again, that falls under another one of these, you know, behavioural biases, which is what's known as the illusion of control bias, where actually we believe that because something happens a lot, the impact is quite severe. So if you use the analogy, we always used to use this in insurance, car crashes happen all the time, but invariably the impact is quite small, whereas a plane crash doesn't happen that often, but it's catastrophic when it does. So people get this perception of marketing always going wrong. Now, I don't necessarily believe that, but this is what the mindset of a lot of people is, that, oh, marketing goes wrong, I've been ripped off yet again. But actually, the impact on most businesses for their investment in marketing is quite small if it does go wrong. The key is to find the right marketing company that share your values, understand your aspirations and ambitions and what it is that you're wanting to achieve. Because that, weirdly, this situation that we've encountered over the past 2 months has played right into your hands. How you deal with it,
I know,
it's down to marketing people now. So I would be touching base with a good marketing organisation that is, dare I say it as well, it's probably not a younger person, is actually a little bit older and understands and may have elderly parents of their own. So actually everything that's happening resonates with them. That would be my advice.
Yeah. Cool.
Fantastic. Hopefully that answered your question. Just a quick question here from Joe, and I'm conscious of time, everybody. Quick question, Brian, just give us a number. What percentage of businesses don't know their numbers approximately?
Ooh, I would say from what I see, it's probably 60%, quite high.
Yeah.
When you get into the realms of £3 million turnover plus, that percentage comes down quite significantly, because most of those businesses may well have a financial director in situ, or they've employed, you know, that does it, Gary Martin, they've employed a de facto financial manager, and they've got robust accounts in place. But it tends to be the businesses, probably £2 million and lower, that invariably don't know their numbers as well as they ought to.
I'd say it's much higher than 60%, to be
Really?
fair. I'd say it's 80 plus that don't have them in the level of detail from my experience, but I guess it depends on who you're chatting to, doesn't it? Has anybody else got any more questions? I'm conscious of time.
Jo was shaking her head as if she didn't believe those figures. Or was
Well, look, thanks everybody for joining us. I hope that's been of value. Brian's kindly shared a lot of insight and wisdom with us. There will be a recording available in the next 24 hours for those that want to just have a view over it and just pick up any little bits that they've missed, and equally one or two that couldn't join us this afternoon. We're going to bump next week because it's a bank holiday. The next webinar in the series of Confessions of a Business Owner will be on the 1st of June. Same time, same day, so Monday at 2 o'clock. And that's with a lady called Sally Roberts from Fun Training for Results. And she's going to be talking about a very, very hot topic, how to be a sales ninja. You know, the reality for most small business owners is you've got to sell to bring business in, but we're not trained in selling. So Sally's going to give us her 3-line whip on how to become a sales ninja, particularly in the current environment. So I hope that's been of value for everybody. Brian, thank you ever so much for joining us and sharing your insight and your wisdom. It's been an absolute pleasure. And thanks to those that have joined us. Thank you very much indeed. Take care for now. Bye-bye.
Thank you.